one time for the one time. We back again with the news you can actually use. You did. And today we're gonna answer the question, why doesn't your trading improve? Who? I'm talking to all of us. Why doesn't our trading improve? Let's take a deep dive today and look at that. Now, they have some interesting moves in the market. You see some strength coming into different currencies here. We see this little indicator, but that's neither here nor there. Let's get into the topic of today is why your trading doesn't improve. We all been on that carousel, that retail merry-go-round, where it seems like we just have to try a little harder, put in a little bit more work, and we can see the success. We notice we get the wins, then we give it back. So let's try to dissect that today. So good article from Nick P over at bulls.com. Excuse me if I got that name wrong, but he's going to be stating there's no secret in trading. What makes it difficult is not that the system is rigged against you, or as I like to say, that it's not necessarily that the markets are manipulated, it's more of the education. Now, most of the issues always dive within self. Again, the best system or strategy you can have is self. So let's hit hindsight bias today. Hindsight bias is a psychological issue that's going to stop traders from objectively viewing their trading results and figuring out methods to improve them. To become consistently profitable, we have to learn to combat this psychological issue. So quickly, what is hindsight bias? The textbook definition of hindsight bias is the psychology of people to overestimate their abilities to have a perceived outcome that could not possibly have been predicted. This is market talk 101. We always get into that, oh, the market's wrong. I see this particular setup, the market has to do this. We have to keep on the forefront of our mind that we do not control the candles. Now, this is a phenomenon witnessed in trading on a regular basis, and one of the common reasons why you can't actually improve your trading results or you stay on that retail carousel. Now, perceiving your trades in the now and not in the past or the hindsight. Easy for us to say, if we bought there, I would have caught the move, made a lot of money. This should be a short, not a long. It's easy to go back with a trade and say, I should have bought lower because the stock traded lower than my entry for a period of time. It's easy to say that I should have bought higher when the stock kept trading higher, or the Forex asset, crypto, commodities, bonds, whatever we are trading. Now, if it was that obvious that you should have bought low and sold high, you wouldn't even be saying that. So a little bit more about hindsight analysis. I'm just going to run through this article, some great context. I will try to link it in the post or the reel, whichever way we send this media out to you guys. So when Facebook's stock goes up, analyst says it's because of great fundamentals. When it goes down, they say it's because of the trade war, or add in whatever reason you want to place there. Concerns weighing down the overall market, geopolitical issues going on in that moment. Now, hindsight analysis tells us nothing about how to capitalize on similar opportunities in the future. It's easy, and this is very pertinent. It kind of deals with ego. So it's easy to seem like a genius in markets by talking in hindsight. I always say this, a lot of these guys we see out here, quote unquote gurus, will show you guys a chart, mark off levels and say you should have bought here, you should have sold here. So that's very easy to do, and to make yourself seem like a trading genius has nothing to do with what we call the right side of the chart. Now, you won't be able to actually make money from the markets until you learn how to capitalize on opportunities before the move happens. So learning how to trade the right side of the chart, not the left. Each moment in time is going to be different. Each pattern actually moves in a different manner, despite if it is going to be the same double top, triple top. They all have their own characteristics each time that actual pattern plays out. So big thing we talk about is probabilities, statistics. We want to let the numbers do the work, and we want to look over the longer time series are more of a series of trades instead of a couple of trades. Now, in order to overcome hindsight, you have to think in terms of probabilities. The correct trading decisions are actually not based on what happened. It's going to be the process that you bring to the actual performance. It's going to give you guys a longevity and consistency in the market. And that's what it kind of covers here. The correct decisions are actually not based on what happened after you made a decision to buy or not, or to short or not short. It is based on the probability of what will happen at that moment. So statistics, probabilities, risk to reward. A stock goes in any direction at any given moment. What happened after does not validate your decision. So it's not about the results. It's actually about the mind you bring to your trading, the process that you bring to the actual performance, to actually obtain the performance. So even a setup that has 70% win rate, still a 30% chance of it failing. Once a stock gives you a setup, makes you money in the long run, it's your duty to be in that stock no matter what. So a lot of times I get a little pullback, say, hey, Nick, I see this chart, trending up. Why are you selling? Due to certain criteria I may have seen that, no matter what, I'm going to keep taking that trade because I know the statistics in the long run. Over time, I am going to make money on this particular setup. So a hard thing to overcome is taking losses in the market, but it's very vital. So I did want to bring that to you guys today. Now, what happens after, they also add what happens after you enter doesn't matter. Even if the stock fails and you lose money, you did the right thing. And I can't remember the exact quote about the process over the performance, the mind you bring to trading. If I find that quote, I'll tag it or I'll drop it in this video as well. Just a quick example that, they did make money on this move up, but it wasn't a high probability decision. The answer, he says the answer was no. Most of the time, a penny stocks in this reference that's almost up 300% will not follow through to the long side. In hindsight, it looks like you made the correct decision because you made money, but in trading, the correct decision isn't determined by the outcome of one trade. They're going to a series of trades. 9 times out of 10, buying that stock up on a 300% day will not work. What happened after your decision did not determine whether you made the correct decision or not. Winning traders, consistent traders, we do not let what happens after we enter or exit the trade affect what we're going to do on the next trade. Same thing, same process, gets very routine, very mundane. You cannot let hindsight bias determine whether a trading decision is correct or not. So it's going to be great to, they say back testing, but I like to forward test small accounts. Actually, how it works in moving market conditions, because the conditions change. Ranges could be more volatile, ranges can expand. So different strategies. You got to have your toolkit, your utility belt with a great arsenal to survive through these markets. So hope you guys, as always, caught some value. Hope we gave you some news you could use. Today we were just asking the question, why doesn't your trading improve? And we're hoping we can get you guys off that actual retail merry-go-round. A couple of quick things that you can look for, not only in your own trading. This will help you evaluate or decide what type of mentor you guys could actually use and start learning from, and also growing in the market. So if you notice, a lot of hindsight, always posting results, always posting, markups of our kind of teaching education through things that have happened in hindsight. Now you guys know that parlor trick. So Nick with KVFX, King Visions Forex. See you guys on the next video. As always, like, share, comment what you guys are wanting to hear about, and we'll see you guys on the next video.
Hindsight bias means that, and it usually tends to affect people who optically look at charts or select systems. They said, I would have done this had this happened. And that usually is completely irrelevant because you weren't there in the past to be able to do that.